Hi and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
It's been a while since we have our Friday chart clinic. I think the last one we did have was about a month ago, and there was a couple of holidays around, and falls on the I think the public holiday falls on a Friday, and I was away last weekend to Penang. Apparently, on the way back, I found out it was the worst traffic jam I ever been from Penang. I left Penang at 4:30. I didn't get home until 12 o'clock. Wow, I tell you. So the key lessons I've learned: if you want to go up to Penang to have good food, make sure it's not school holiday. But unfortunately, I have two children who want to go up to Penang to the beach. Well, as a parents, we all have to do that, right? So make a note of that. Now, Penang, the traffic jam starts all the way up from the Penang Bridge right until Sungai Buloh. Man, that was tough, man. Luckily, I got my wife to help me to drive. Okay, so much for the traffic jam. Now let's talk about the June 2003 stock market comments that I have. We've been very spot on over the last 3-4 months. As we said before, as early sometime in March, I did say on my stock market comment is to march on, really march on. And for those people who hear our advice for our April and May, and even May, I said we will ascend to a new high. They actually profited from that. You could see one of the stocks we were stock pick, which is last month for the fundamental stock pick, was Power Roots. And I do believe Power Roots has gone. Anyone bought Power Roots last month? Those premium members? Huh? Premium members who have bought Power Roots when I mentioned that? Okay, let me just show you Power Roots. Huh? Okay, that's a nice one here. Okay. Okay, we will go to that one. Anyone bought Power Roots? Any of you all bought Power Roots? Maybe not. Okay. Let me know if you bought Power Roots. I just want to know everyone took it. Because I've been recommending shares for the last 1 or 2 years, and we did done pretty well. And most people, after I recommend many months only, then they decided, hey, it's about time I want to get in. And that's a bit slow. Also, at the same time, there's some of you who take my stock pick seriously and able to manage their EPF portfolio as well as their retirement portfolio much better. Now, for you who don't know, we do manage the EPF portfolio for our clientele, and we are happy to announce from beginning of the year until now, as of yesterday, when I look at my clientele, we were up almost 9% compared to CI, which is 4.5% and 5%. So we achieve, which is very good. By all standards, we beat it by half. Now, the question I told some of my clients, like, be happy if you can achieve 20% by year end, which I don't think so. Now, don't forget, currently, that's why I tell the client now, June 2013 is market corrections. What happened when the bull market corrects? Okay, so you notice for the month of May, we are up 5.3%. So, and since then, the market has pulled back a bit. More on, let me see, where is the market now? This morning here, 1774. Okay, that's 1774. It should come down to your screen now, right? Are you seeing what I'm saying here? Okay, let me just open this up first. Okay, screen showing. All right. Okay, good. So you are seeing what I'm seeing. Okay. Okay. So that has been the take for the day. It's gone up by 5%, and if you look at KLCI, it's only up almost 4%, 4.5%. So that's how you manage it. And a couple of good stocks that done very well. I think most of you know is our Gas Malaysia, which has been one of the main portfolio that we have, and also Guinness Anchor, which is almost up. What if you check from the Magic Scanner? I think you have that. Oh, my Magic Scanner is not up. Unfortunately, my website is down this morning because I've been hi Steve. We've been down because of our network that is down, so we are looking to repairing that. So our portfolio has been great. We are up 9% for the year. Compared to CI 4%, so we've been great. A lot of clients are putting money in that. But going forward, we are a bit cautious, and I will talk about it today on my June market, and we talk about market corrections. As of now, more update tonight when my Friday closing bell. So for the premium members, come and attend the 4:15 talk, or you can watch the recording later. What we are looking on. Okay, let me just refresh this again. Right. You could see market really narrowing down in a tight narrow band here. That's gonna tells a lot too, because when you have narrow tight band here, okay, and here, this to me is a one-eye Joe trade. A one-eye Joe trade meaning it can go both ways, okay, either here or here, okay. So it's as good as anybody guess. It's interesting enough, today on the Sun newspaper, they did not show the foreign funds flows. My intern who is with me was telling me, hey, the foreign funds is missing. Some maybe it's because we've been using it so often, people find it that's an edge and they want to take it out. So people like us and you, the average investor, can't get it for free from the Sun. And this is things that they do to take away the edge from you, because they don't want a local guy that can make, like myself, make 9% return when the unit trust can only give 4%. That looks very bad for them, right? So this has been the name of the game, right? They will do whatever we can to take the edge out there. But luckily for us, that is why some of the tools, if it's free, don't expect a continuation to it. You always need to pay for a cost. And the question is, if you with us, the traderstruthreview.com website, we've been guiding you in the stock market over the last 4 to 5 years, and make sure you are profitable. And to me, I'm still surprised. Some people come up to me, thank you, Martin. I've been following your advice. I did make a 30% return since last year. So that's been great. And we wanted to continue that too. Okay, you may experience some audio difficulty. Just try to bear with me. If you can't, I appreciate if you can just watch the video because of the internet that I have at my office. Okay, going forward. Some of you may have read this, my report that I have. Okay, at the same time, so you would see that now we are looking at is the stock performance crunch time. Be ready for the new rise. In May, I said about that. There was crunch time, be ready for a new rise, and it did. Right? Remember in May, this was May when I issued this, I said that the market's going to go higher, and it did. So a lot of people say, hey, did you have a crystal ball that tells you where you are? And for those of you who do came to my talk on April, the pre-election one, we did update you with what we think the market is. And also on the post-election on the 6th of May, we did update some of our clientele on our office. And we will have the second year half update on July 21st, July 27th. Okay, so make a note that on your calendar, July 27th. July 27 on the convention, we would have a second year update from myself and Bill. Plus, we'll get a guest speaker. We're trying to get the guest speaker to come. So that's going to be a challenge to see the guest speaker would agree or not. And this is a guest speaker. I'm not going to mention that much. Okay. I'm trying to get him to come, but I'm not going to mention his name over the airwave and see if he would come or not. Okay. Like this very special speaker all want to say here and say first. So let's see how you know. So bottom line is why we've been very spot on is because we use tools and also probability. I think a keyword is a tool and probability to really look at the market. And a lot of people tend to look at the past general election GE11 and GE12 and to decide the outcome of GE13, because GE11 and GE12 was bad. So they said GE13 is going to be bad too. I even got a client say, hey, you say BN will win marginally for GE13. Wow, I disagree with you. I think PKR will win. Why and so forth. Oh, I want to close my account. I said cannot one. PKR cannot win one. There are certain reasons you have to know. They just don't go away. The old government just don't go away that easily. There's a lot of factors and macro factors we have to look at. So don't be so emotional on market. If you're emotional about the market, you will lose money. Okay, so that has been over the years that when I look at the market for the last 15 to 18 years, I'm in the market and I love this market. As you could see, the market made new high 1826 and we are all-time high. So, and we are still up there. Okay, so as you can see, this is the in front of you. You should be able to see this, right? Okay, in front of you is the foreign funds flows here, and since December to May, there is a steady climb. But over the last 2 weeks, when we get to our closing bell this evening, you'll see the last 6 days we have a decline of foreign funds leaving in small quantity. Small quantity is the keyword, not that huge, and that's probably tell why the market is more. But surprisingly, compared to SGX, which has fallen almost 7.5%, and Nikkei, I do believe today going to hit the bear market. Let me see, where's Nikkei now? Oh, Nikkei down another 2%. There you go, 252 points. So we are in officially bear market for the Nikkei. However, having said that, it is still up 25% for the year, because it's been up 45% of the year, down 20% of the year, still up 25% of the year. And a lot of people are saying that Abenomics or Abe economics did not work despite his first arrow, second arrow, and third arrow of this. So that's a lot to be said, but definitely market is taking a hit, down 2%. We will talk about it more in our Friday closing bell, which is another topic for that. Okay, if you want to know more about closing bell, you can always subscribe and be a premium member. Okay, so having said that, this is the foreign funds. They are still bullish, but I do believe we will see a tapering off in there. And the question you will see is it time to sell? Is it a bear market coming? So don't be so sure yet. Okay, don't be so sure yet. What we're saying, the train is moving. There will be correction, and over the years, one of the things that we do in our client portfolio is Titanic proof it. Now, those of you who know what Titanic means, is unsinkable. Okay, meaning you buy the high quality stocks, you avoid those cyclic counters like oil and gas, Dialog, SPK or SKP, Sapura Kencana Petroleum. What else? Those Delinium Dayang Construction Company, UM Land, SP Satir, and a little bit of REITs here and there. So that's what I mean. If you avoid that and stick to the conservative, I can tell you what I've been buying the last 3-4 weeks. I've been buying JTI, BAT, Nestle, Dutch Lady. All right. So those are the things what I've been doing and try to Titanic proof it, and that's what this year we are up about 9%, and while everybody else is trying to make end meet. Okay. So market corrections. Let's talk more about market corrections. Let me just erase this. Is this okay so far, or is this? Do you like what you see? Just give me a feedback, please. Or all you already asleep? Because, all right. Is this okay so far? Can I appreciate some feedback, please? Okay. Is this okay so far? Is this okay so far? All right, good. Thanks a lot, Tan. Thanks a lot. Okay, good. Thanks, Yap. Right, let's talk about market corrections. Okay, now the screen in front of you is what we are talking about, a 3 to 4% correct or 6 to 8% correction. Now, as you can see in Singapore, we have almost a 7 or 8% correction, which is normally in any corrections. So market, what it means is simply correct from the top. On the old high that we have at 1826, we can see the peak here. Let me just erase the drawings here. This is the old high that we have. This is the market corrections, and we are talking about 3 to 4 corrections in here, which not even happened yet. So a lot of people say, oh, you want to sell now and sell. Market not even corrected yet. I was expecting to correct, did not correct. Our market very strong. The local institutions are holding an EPF, PNB. What else? LTAT. Some more. You can see Aberdeen Asset Management, FMC. What does FMC stand for? That's a Fidelity Management Corporation. GIC. GIC, Government Investment Corporation, and Temasek. They are all in Malaysia. Why you worry? Okay, they haven't even break down yet. All say want to sell already. Okay, so don't be too overly cautious. Wait for the correction. Now we can see we are still in a nice, beautiful uptrend channel in here as I dropped before. I was hoping to correct. Tada correct. You got correct, I'll go in and buy. Not yet correct. And if it does correct to even extremity, we are looking at a 6% correction to 1660. So the train is still moving forward. Uptrend, moving forward. Corrections has to come, but it hasn't come yet. Will we see a correction maybe further in the month of July or end of June? Possible, but as it is, I need to wait for the market to hit the 1750 level, and it doesn't hit that level yet. So these are the two scenario that we are building in for the market corrections. Very important, and if you can put things in perspective, you would have more control of your emotion and be calmer in the market. Now, most of you would agree if you don't have a very strong emotion heading to this, the market volatility, if you see Japan swing like 10% down, 7% down every day, you also scared like nobody's business in here, right? Right. And we got one of my students in here who've been following a lot of our, our methods of trading. Maybe he can say one or two words, Steve. Just say a few words. You've been following our method in here, right? Just introduce yourself and just say one or two words. What I guess typical. Just talk.
Hi, actually everyone. My name is Steve, and actually I've been following Martin the how to say method yes, investing. So far I can see just to share my returns for can I share this Martin? Yeah, can so overall for 31st May I started investing about 2 years 2 years back. Yeah, so about 29% return So I think what Martin say 10 talking about 10% return is quite what do you call that, realistic yes yes. So on the maybe I should just say maybe the trading part I not so I still need to improve on that brush up on that. Yes.
Thanks a lot. That was Steve. And, of course, what we always do is try to, encourage everyone to both invest as trade. Now, Bill is in the room now, okay, just like Elvis is in the room. Or Donald Trump is in the room. Now we have Bill, and Bill is our US and gold correspondent. He's going to give you an outlook, an update, and other. Are you ready, Bill, to get onto the air? Okay. Are you ready to talk on the air? Okay, that's it. All right, Bill.
Uh,
Okay, hello everybody. Bill is here. I have a few things to share with you. So one of the main issues that we are concerned with now is quantitative easing. There's been massive drops in markets worldwide in the last few days because there is fear that they're going to withdraw the stimulus in the U.S. and that would cause interest rates to go up, not just in the U.S. but in Europe, in Japan, in Australia, even Singapore. Worldwide, it would cause a rising up of interest rates, and that would be very bearish for stock markets. It would be very bearish for property. It would be bad for the automobile market, and would have the potential of creating massive turmoil and perhaps even recession or depression. So people in the markets are motivated by fear and greed, and fear is a much stronger emotion than greed. So that is why markets fall much faster than they go up. But remember, fear, if you take the word fear, FEAR, and it's an acronym for false expectations appearing real. So, is this real? That's what we have to ask ourselves. Well, the issue is this, and the way the world markets are running, the world economies are running, they are not run by central bankers. And the bankers have the authority to raise and lower interest rates. They have control over monetary policy. And that's the way it should be. However, it's not that way anymore. In the last 20, 25 years, um, politicians are the ones that are running the markets. And politicians have only two things that they want. They want power, and they want to keep getting reelected. And power is a drug for the politicians. So that means politicians are controlling the actions of central banks. And what it means is Bernanke is the head of the central bank in the U.S. However, Bernanke is not the one who controls what goes on in the Federal Reserve with regards to interest rates. Bernanke is simply a stooge or a puppet of Obama and the politicians who run the U.S. government. And when Obama says to Bernanke, we want you to put more money, print more money, stimulate more, the answer is, yes, sir, we will do it. And that's how it works. Now, just like poker or any kind of gambling game, You never want to show the other player your cards. Now, on one side of the public, Joe Public, the sheep, the herd of investors. So the way the authorities act is to put as much fear into these people, to get them to panic, to do the wrong thing, to sell all their shares at the low, to sell all their gold, um, and put all their money into U.S. dollar bills. However, this is simply a manipulation and a bluff, as they say in poker. It is a bluff. But the smart money has an agenda, and in my opinion, this money printing is not going to end. They're going to